Good morning from the OSL desk in Singapore. Today, the video is going to cover Ethereum. But before we look at the charts, I wanted to talk briefly about the developments that you might have read about in the news regarding changes to Ethereum's protocol. The main thing that's currently being discussed is the rollout of the London hard fork, which, should the vote go through, is scheduled to be released on the 4th of August. The big change here of interest is the Ethereum improvement proposal 1559. This essentially looks at changing the fee structure in Ethereum's protocol. As Ethereum moves from a proof of work towards a proof of stake setup over the next few months, with the final release being touted for 2022, this is one of the improvements that is being made. And it essentially works like this. So at the moment, the way you pay for an Ethereum transaction, you send gas fees to a miner. The miner will choose the transactions in the block with the highest gas fees and confirm those transactions. What that means is that in times of high Ethereum transaction demand, these gas fees spike and make things very expensive. How this proposal changes things is that instead of sending the Ethereum gas network fee to the miner, it's actually just set by the block within or the block in which the transaction will be confirmed in. So you're just paying a maximum base fee for your transaction. Now you can still tip a miner if you want your proposal, if you want your transaction to be prioritized, but it essentially caps the amount that you have to pay for a transaction. There's two consequences of this. The first is that there's lower profits for miners, so they're not too happy about this change. And the second is that because the fees are being burnt when they hit the block, it puts in deflationary pressure on Ethereum. So as transactions go through, more Ethereum is being burnt and there's less Ethereum available at the end of the day. That's a broad overview. I hope that makes sense. Let's look at the charts. Ethereum over the last few weeks, months, has been trading quite nicely according to the Fibonacci retracement. We're looking at the low of the bull run in March last year and the high that we saw in May this year. Over the last few days, it's kind of been trading sideways with a bit of deflationary pressure, or with a bit of downward pressure. Immediate support I see at 1975 to 2050. That's actually where the 200-day average is currently at. So we'll hopefully find a bit of support there. Below that, my next level that I'm looking out for is the 1650 to 1750. That's kind of the low that we've tested several times in the last month. And there's also where you can see that Fib retracement of 0.618 coming through. To the upside, initial resistance I see at 2350 to 2450. And above that, we're looking at 2750 and 2900 as the main areas. Now, whenever we look at altcoins in cryptocurrencies, you always need to look at the value it has with Bitcoin. Otherwise, at the end of the day, a lot of the time, especially with the lower ranking altcoins, you're looking to outperform Bitcoin rather than the US dollar appreciation, if that makes sense. Otherwise, you might as well just buy Bitcoin and get a return there. So let's look at the ETH-BTC pairing. Again, the Fibonacci retracement has been working quite well in identifying levels of support and resistance. It's trending slightly downwards over the last 6 days. That means that Ethereum is underperforming the Bitcoin price. Immediate levels of support for me at the 0.0548, 0.0568, as well as the 0.60, which is exactly in line with the 0.382 Fibonacci retracement as well there. On the upside, we're seeing initial levels of resistance at this local top, which is more or less in line with the 0.236 level. So that's around 0.7, and beyond that is anyone's guess, really. I mean, you obviously have the initial resistance areas up here, but because we've hardly been there, it's tough to identify something properly. That's really it from my side this morning. Have a good day.